Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter. Going to hit that up. I posted a lot of charts on there, so we're going to go over some of my charts. Ones that I made, I was kind of looking around. Sometimes if I'm looking too much into certain sectors, I start looking at other sectors. I was looking at the bank sector just to see how bad it is. It looks pretty bad. it's pretty bad. I'll show you the charts and what they look like. And again, this is just my financial opinions. Please don't take it as advice or anything like that. So let's dive in here. Let's see what we got. And again, if you want to follow me, it's at finding_finance. And if you want to hit up the website that I've got, it's www.finding-value.com. Become a platinum member, join our community. Love to have you with us. So let's see what we got. I said, come on, that screams a buy, right? Said, my Lord, these banks look bad. So I've got Credit Suisse Group here. It's got this gigantic kind of moving into a corner, and it just continues to bleed profusely to the downside. They've got some major problems. I know they're trying to get bought out or something like that. But I wouldn't be looking at this thing, that's for sure. I also have Bank of America. What I see here is I see a trend line. This is on logarithmic. Trend line coming up, we squeezed to a top, rolled out over that, and came back down from the banking crisis, we'll call it, from the great financial crisis of a deleveraging event in the real estate market. We came back up again, doing another double top, and this thing looks like a Mike Tyson punch out to the downside. It punched out of this to the downside. I just threw a trend line real quick on it. And it does not look good at all. This could fall dramatically, like big time crash style. We've got Bank of America, or US Bank here. Nice, very nice in the 1970s all the way through. Very nice uptrend move here. We squeezed up into the corner here in 2019 or so, dropped back out. So basically broke down to the downside, came back up, did a retest move to that trend line, and we're starting to get some selling pressure here, and it's intensifying. When I look at this chart, I wouldn't buy this stock with your ex-girlfriend's money. I would not even buy it with hers. This looks horrible, guys. This looks really bad. Maybe we get one last thrust higher. I don't know. But this thing does look bad. And I wouldn't be entering it. We've got Bitcoin here, and I said dandruff has plagued Bitcoin. Inverted head and shoulders, anybody? So I've got an inverted head and shoulders here. We broke out of that, did a little retest, and then beelined it straight to the upside. We've got a move, like you can even put a trend line through here as well, where we put in a regular head and shoulders pattern here. We've got shoulder, head, shoulder with a neckline here, and that just crapped to the downside. And now we've got another inverted head and shoulders pattern that is broken to the upside of that neckline. So we've transitioned from an inverted head and shoulders to an head and shoulders to an inverted head and shoulders, which is quite interesting. And obviously I had to put the head and shoulders on here, the classic clean. Because this guy is throwing in a bunch of head and shoulders patterns. We've got XOP, yeah, you know me, an oil exploration production ETF. I said we had a head and shoulders topping pattern before, but it looks inverted now. So before we had the head and shoulders here, shoulder, head, shoulder with a nice neckline going across. And then I put a neckline on top of this guy here. And I said, well, if we invert it, this is all in logarithmic too. We've got a shoulder, a head, and maybe another shoulder coming potentially in XOP, where we do have a little bit of downside left before heading higher. I'm not claiming that's what's going to happen. I don't know what the future holds in store for us. I'm not a genie in a bottle making wishes, or nor can I read the future. But the cool thing is inverted head and shoulders do make a smiley face, basically. So that's always good if it's an inverted head and shoulders, because it's a smiley face. We also have the oil price. I said, could we have further downside in oil prices? Sure, we could. I still remain bullish on the long term. The entry point of a lifetime is either here or is coming soon. I don't know. Again, I don't know the future. Maybe this is going to pull all the way back down here to the $40s. Maybe we do get that big scare. If by looking at the banking charts, they sure look scary to me. And this could bring and pull everything back down into a deflationary type scare for a short period of time. If that were to happen, what it's doing is setting up the best buying opportunity in commodities that you'll ever see in anyone's lifetime if that were to happen. It would be a full retest of this trend line, this breakout retest. It'd be a full retest. It would close that all up. It would mimic a move like this, but it would be a larger move to the downside. We're at about a 50% retracement or so is what we've done. We went to the 60s and we were up around $130 a barrel is where we peaked. It's possible we go down 61.8% or something like that. So that is a possibility. But again, long term, definitely a major, major bull on oil. Major bull. You probably can't find too many guys more bullish than myself. But short term, again, those banks look pretty scary. And maybe scary things can happen. It's a possibility. So we've got another one. I says, is this a thing of beauty? So it is a thing of beauty, everyone. So what I have is a long-term gold chart. This is 2009. This is what it is today. It's got a cup and handle pattern. And it's about to break out of the neckline here any second. This is one that everyone should be watching now. Because if we get that break, I think it will break. What it means is that the market conditions are changing as well. It means that people are going to be scared, probably running out of bank stocks, and banks because of the dollars themselves running out, liquidity and stuff. There could be a problem in the banking system, definitely. When looking at those charts, they definitely look pretty scary. But gold looks absolutely phenomenal. Phenomenal. And we'll see if we get a breakout here. This is what the cup and handle pattern looks like. You've got an original trend. You get a pullback that's got a candlestick rounded bottom. Then you get the handle, which it can be a rounded bottom as well, two rounded bottoms, or it's a flag pattern. And then you break. And that's exactly what we have here. And we also have it on silver. Silver, this one is all the way back to 1970. We've got that lead-in pattern. We've got a nice big cup, and then the handle's forming still. And this thing is absolutely gigantic. Is this a slingshot of a lifetime when we break out of that, $49, $50 mark or whatever technically it breaks? This is going to run, and it's going to run big if it breaks out of this pattern. If gold is already starting to break out of it, I am guessing that silver will follow behind it, and it will probably be amplified. Platinum also looks good. I didn't put platinum's chart up there, but they all look good. So this is Captain E-Wave's 40-year chart of the U.S. 10-year. If this plays out as expected, duck and cover. Now, I want to make sure everybody understands something, all right? These gold and silver charts, crude oil, all of these charts are signaling we've broken out of a long-term consolidation time. And we're breaking these massive patterns to the upside. And we may have a little bit of a lag time before we really break to the upside. This 10-year bond yield chart, it's basically one big downtrend. We're putting in a bottoming pattern. And this person thinks that we could drastically move to the upside in yields. What that is indicating is that we have very strong inflation coming, as in a currency crisis, perhaps. And someone said, if this plays out, sell your precious metals and BTC positions. I disagree. That money is going to rotate out of bonds and look for something else to invest in. It's going to look for protection. That is how you're going to get that big of a move. And during that time frame, I think that gold could do very much similar things like the 1970s. So that's what I think could happen. I also think if it's a highly inflationary environment, that crude oil is going to go ballistic. And I also think that platinum is going to go ballistic. Back in the hyperinflation of Germany, gold and platinum, the platinum to gold ratio is what I should say, got to a ratio of almost 6, but it was around 5.5. That means that platinum was priced 5.5 times the price of gold, at least from the ratio chart that I got from someone in Germany. And they were showing me that in history, and that goes all the way back to the 1800s, that platinum to gold ratio chart. The crazy thing is platinum outperforms during inflationary environments. I've seen a bunch of different charts with that on it. So if that is coming, platinum is incredibly cheap right now. Now here's something. It says, who would have thought? And I want to make some comments here. All right. So it says CEO pay isn't correlated to performance. 10-year shareholder returns for companies with higher paid CEOs versus lower paid CEOs compared to the respective sectors. And so it's compared to the respective sectors. So that's good. But I just thought this was an interesting thing. There was other people saying that returns of female board holders or owners or more females on the board or whatever had higher returns. And I thought that was kind of a misconception, or it may be true, but I don't know if it's a valid metric to really compare to, because I think a lot of the dirty industries that people don't want to do are probably run by males to some degree. And I saw a bunch of females running, like, they're a lot in the health areas and a lot more stable sectors that grow more consistently, I would say, which is smarter to be in. That's definitely true. But it seems like some of these sectors like mining and stuff, I just don't see too many females running the mining companies. I don't know of really any that are CEOs of these companies that just do crazy stuff. But one other thing I wanted to make a comment on. Now we've got Warren Pies here. I respect him. I think he's a pretty cool guy. He's sharing a lot of information. What he is sharing, it says, it looks like oil is setting up for an epic buy signal. Our model has been neutral since last summer, but things are now happening under the surface. Just my humble opinion. And I know that we have Market Sniper come out, and he's bearish on uranium and oil right now, and he thinks that there's going to be a demand destruction event. When looking at the supply-demand fundamentals in oil, they obviously look very good. But, it's a big but. Butts don't lie, all right? When I look at those bank stocks and I look at the liquidity in the market and all that, there could be a scare in the market in the short term. Definitely agree with that as well. I would actually lean in the short term to market turmoil and potential downside, given what I see in the bank stocks and the TYX, TNX ratio and the things that I follow. I am turning more bearish in the short term as these things come up. But we have we've got differing opinions. I understand both sides of that argument. And I think navigating through these waters is a little bit tougher. Historically speaking, if you were to look at the data, I would side that if we get a deflation, that oil prices will go down with that scenario. It's not about the fundamentals at that point. It is about I'll call it the demand for oil contracts, financial contracts in the market. It becomes a financial thing. And what we see during these scares, and I'm not saying like that all roads lead to money printing. They almost always lead to money printing. But we could see a scare in the market that brings everything down in the short term. and I am on board with that for sure. That could potentially happen, and we get a really good entry point. And then when they print that money's going to be liquidity driven. And when liquidity comes in the market, it puts oil into a shortage, which is already basically fundamentally supply demand will be in a deficit at that point or very close to it. And that's where it's going to rocket oil to unimaginable levels. So, yeah, I agree with that. It says nobody goes there anymore. It's too crowded, oil edition. And right now it says WTI's crude long positions fell to the lowest since 2016. So that's what I've got for today, guys. I just wanted to go through all that and share that with everybody. Hopefully you enjoyed it. And I threw my financial opinions in there. Definitely join our community, guys. If you want to hit up finding-value.com, you can see that in the corner there. Come join us. You can use the word discount in the coupon code. And that's what I've got for today. Hopefully you guys enjoyed it. So give me a thumb up for the content. Subscribe to the channel if you haven't already. And I'll catch you next time. This is Finding Value.